The European Central Bank has come in for much criticism on its approach to drive up inflation and growth. But are credit conditions beginning to ease? Wei Li, Head of Investment Strategy for EMEA iShares, joins us now with more. Are the conditions easing? I mean, the bank has done what it says at the moment is enough, but I know it's lining itself up to do more should it be necessary. But are credit conditions beginning to ease?
Well, we have seen some improvement in the bank lending survey, the quarterly bank lending survey, although to put into perspective, it's coming from a reasonably low base as well. More specifically, if you look at after the corporate bond purchase program announcement back in the 10th of March, credit spreads have tightened quite significantly, especially for corporate papers that are eligible for the purchase program. And if you think about the euro, months to date, it has really started to kind of weaken versus the dollar as well. So more broadly speaking, I think there has been signs of improvement around the broader financial financing condition.
Which credit are we talking about here, or is it a broad range? Because there's lending to businesses, there's mortgages, there's personal borrowing. Is it a broad range of expansion within that, albeit from a low base, or is it specific areas where it's coming through?
Well, housing and to household has always been reasonably robust, although more recently there seems to be stalling. Specifically to small business, small and medium enterprises, we have seen some pickup, but not very strong, and it's also starting from a very low base. So there are subtle shifts within the different components of the bank lending survey, and we definitely see that as some signs of the QE feed through.
And of course, the other question is, or discussion ought really to be around the quality of this business, because obviously we don't want to see lending to anybody that may ultimately turn into unperforming, bad-performing loans. So is the standard being upheld? Is there a better standard now than there was?
Well, there has been a lot of focus around non-performing loan, especially within the banking sector, and that has been one of the reasons why European banks year to date have lagged in terms of performance versus the broader market. But at the moment, given the fact that we're not really seeing a significant credit boom where you see banks lending indiscriminately to enterprises and companies, the question around if the standard intentionally lowered in order to boost demand, in order to boost the volume is, I think we are a bit off. We're still quite ahead of that discussion.
ECB next week, another monetary policy committee meeting when all the heads get together and make this decision on where they go next. Are we expecting a move next week?
I think the fact that more recently the Fed has become a bit more hawkish in terms of the Fed speeches as well as the FOMC minutes release pointing to June as a potential live date for rate hike means that it actually alleviates some of the pressures that ECB faces in terms of having to ease more, in terms of having to increase the size of the QE program, because the euro dollar has already moved ahead of the meeting itself. So specifically going into the meeting, the expectation is more for that to be a technical discussion around the details and the mechanism of the corporate bond purchase process, rather than if they would increase the notional size.
Okay, all right, Wei Li, thanks indeed there for joining us. With a look ahead to the ECB meeting next week and a look at the improving picture for credit business across the eurozone.